What's going on, everyone? Hootmoney here with another video for you guys today. Today, we are going to be talking about the stock MULN, a potential short squeeze candidate that was up over 150% today. Now, we're going to be going over the basics, why this thing can potentially see a short squeeze or potentially a gamma squeeze. And with that, we're going to be deciding, okay, well, should we buy this stock? Should we sell this stock? What should we do with this stock? We'll be covering everything in today's video. So drop a like on the video if you guys enjoy this content. Subscribe to the channel if you are new and you want to see more content like this. And yeah, guys, that's all I really got. If you want all of my personal buy and sell alerts as well, you can sign up for Hootmoney trade alerts. And yeah, let's get right into it. All right, so here is MULN stock. And just to give you guys an update, this thing was trading at $14 in November. And now it is trading at, $1.69. Absolutely incredible. This is a parabolic sell-off. I've never seen something sell off quite as fast and as much as MULN. It's really quite incredible. From a high of about $16 a share down to a low of 52 cents. It completely got its entire market cap essentially wiped out. It has a $59 million market cap right there, a 22 million share free float. So it is a low float, low market cap penny stock, which definitely adds to the volatility of this one. It was up 145% today. Moving into Market Cipher to do technical analysis, we have the weekly candles. The weekly candles are showing a very strong buy signal right here. The green means go buy signal, which shows that on a weekly basis, this stock does have potential to continue to run here. October, it also got a green means go. It went up from about $7 per share all the way up to $15. So that was a 100% gainer right there. The last green means go was back here in April 2020. It went up from $1.87 up to about $19. So the green means go on the weeklies have been pretty solid overall. Moving into the daily chart, it is still very oversold. And this is going to be a common theme here for MULN, because it just drops so much in value from all these short exemptions and whatnot. 4-hour chart, it's definitely getting there. It's a little overbought. The general strategy here on Market Cipher is you want to avoid buying things that are over this 0 point, right? It also has a VWAP, which is this yellow. The VWAP, you don't want it to cross over to the downside. So when it crosses over here, the 0 point, that is a sign to sell. It's pointing downwards right now. Also has bearish money flow, which could contribute to some additional selling pressure. The hourly chart, if we scroll out here, you guys can see it's very overextended from this trend line that I drew in. However, when a stock is squeezing, it can continue to stay overextended. So what you really want to be paying attention to is when it really starts to sell off for real. That's the big part that could be concerning. Here again on the 15-minute chart, it's staying in this overbought region. Today, it stayed in this overbought region. Short term chasing this thing, it's definitely a little risky. But like I said, it can remain overbought. So honestly, the technicals look good on pretty much every single time frame, just because it's just so oversold. And this weekly is going to continue to give it momentum that it likely deserves. I'd like to briefly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. You can get up to $7,000 in free stock as long as you deposit $1 on their platform. So all you have to do is click the link in the description or pinned comment section for Moomoo. You make an account, you connect your bank account, you deposit $1, and that's it. You can get up to $7,000 in free stock right here. I've seen people get Apple stock. You can potentially get Amazon or Google stock. The Apple stock, I've seen someone get an Apple stock before. He ended up trading it up to $700 worth. So it's like, what? You deposit $1, now he has $700 of essentially free money because he traded it. You also, if you deposit $100, you can get a free share of AMC as well. So it's by far the best brokerage promotion. Again, all you got to do is click that link below, make an account, connect your bank account, deposit $1, and boom, up to $7,000 in free value right there. But that being said, let's get right back into the video. Another important thing to pay attention to is Google Trends. So you type in the ticker MULN right here, you can see that it's spiked up in volume since February 21st. And if we go into the past 7 days, we get a more accurate estimate, and you can see that today at 3 a.m. MULN started spiking up like crazy, and the interest is still going up like crazy. Now, this is something that's very important to pay attention to on retail focused stocks, because the more buzz that's going on in social media, the more likely people are to buy the stock and sustain the upwards price action. So if you do pay attention to the search engine volume, which is essentially what Google Trends is tracking right here, it can be a good indicator of what the stock could potentially do. So you can see it spiked up today. It'll be very important to see if it can sustain this interest, this search engine interest on Google over time, over the next week. So we'll be seeing if this thing increases in volume or decreases in volume, and potentially estimate where the price action may go based off of that. Another thing is that they had some news today that they announced progress on their EV battery. So it is an electric vehicle company. They do develop electric vehicle batteries. And because of this, people do believe that it has a decent fundamental value. However, I honestly don't think they have great fundamental value, and I'll explain it right here. You guys can see that their cash went down. From June, they reported $3.93 million worth of cash. On December 31st, they reported $360. So that is a risk, guys, because if this is true, which it doesn't actually seem true, but I've checked on different sources that they don't have any cash right now, they're going to have to dilute shareholders in order to sustain this company, or else the company might actually go under. And I'll show it to you guys right here. You can see in the current ratio, they have $23.47 million in current assets. And then their current liabilities that you see right here is $48.35 million. So their current ratio is roughly 50%, meaning that they cannot fulfill current obligations that are due within the next year. So in 2022, they owe $48 million worth of liabilities. They only really have $23 million that they can potentially liquidate into actually paying that. So they don't have money. So they're in a position where they pretty much need to dilute shareholders or do something to raise cash in order to sustain this company, make sure it doesn't go under. On top of that, they didn't have any revenue, so they posted absolutely zero revenue in a $2 per share loss as of last quarter. So I have to be honest with you guys, I'm not really liking their financial statements, and that could have definitely been something that did contribute to this sell-off. As you guys can see, at the end of December, it really started to sell off right here. Beginning of January, boom, it went down from $5.68 per share all the way to 0.52. So that was a 90% drop. So fundamentals were definitely a contribution to this share price decline. And I'm very, very confident in that statement. What's very interesting about MULN is that it's the short exempts that went out of control in this stock. The utilization is only 22%. It's only 7.5% cost to borrow right there. Honestly, short interest, not too impressive whatsoever on Ortex. It was up 146% today on the spike. So shorts are taking advantage of this, right? Because it's super cheap to borrow. It was up over 150% today. Shorts are taking advantage of that very cheap cost to borrow, and potentially they are betting that retail will paper hand this and go out of the stock. So again, that's another risk that we're fighting short exempts right now. We're not fighting the actual short interest on Ortex, and there's actually plenty of ammo for shorts to actually step in here and continue to short the stock. So moving into the short exempt data, I pulled this from FINRA, and it's very, very interesting. So first things first, we need to know what exactly is a short exempt to actually understand this in the first place. So a short exempt refers to a short sale order that is exempt from price test of the Security and Exchange Commission's regulation SHO. The current implementation of this regulation contains a modified version of the uptick rule, which restricts the price of short sell orders on a security whose price is falling. So essentially how that works is that if a stock goes down 10% intraday or 10% on the day, the next day you can only short sell a stock that's on an uptick. And we'll pull up the ticks right here, and you guys can see it moving right now. So the rule basically states that if a stock goes down 10% intraday or 10% on the day itself, the next day or the remaining trading day, if it happened intraday, cannot be shorted on a red tick. So you're seeing red ticks and green ticks. The rule, the short sale regulation, or SSR, you can't short the stock when it's on a red tick. You can only do it on a green tick. And this basically prevents things like what happened to MULN right here from happening. You can't just continue to short the stock, continue to drive it down, slap the bid over and over and over and over again, and completely destroy the stock price. And that's essentially what's happening here with MULN. So a short sell exemption allows you to short the stock even on a red tick. So even there, you see that red tick, boom, they can short it again and bring it down even more. With the short sell regulation, you can only do it on a green tick. So you can short it right now. That makes sense. But no, you can't do it right now. But with a short exemption, you can do it right now on that red tick. So when can a trade be marked as a short exempt? They're essentially exempted from that SSR rule. It's when the seller owns shares being shorted but is restricted from delivering them at the time the short sale is placed. The short sale order is being made by a market maker in order to resolve an odd lot position. The short seller is attempting to arbitrage between price differences within the domestic and international market. The short sale is made in connection to a layoff sale or over allotment. It's executed on a volume weighted average price basis with certain conditions. So like all things in the market, they were placed for what seems to be a good reason. Like you can say the same thing about dark pools. The whole reason that they were created was for what seemingly was a good reason. But in reality, hedge funds, market makers abuse these tools that the market allows them to use. And in result, it creates a ton of bag holders and people like retail. And it's just completely unjust, completely unfair, and needs to change. And the short sell exemption rule is no exception because it's also being abused by market makers to just unjustly drive down share prices of stocks. All right, so here we have the short exempt volume from FINRA itself. I pulled it from FINRA and I made this spreadsheet. As you guys can see, there was a ton of short exempts right here in this column. Now, we started back in November because that's when the sell-off began. It was a pretty just sell-off. You're not seeing too many short exempts. The most you'll see here is about maybe 20,000, which is not too crazy. It's about a 20 million share float. 20,000 short exempts, not too crazy. But as we get into February right here, they start going absolutely bonkers. Starting on around, I guess, February 4th is when it really picks up, 32,000 up to 100,000 there on February 2nd. Now, they have multiple different markets here, so there's going to be more than one short exempt listing per day. There's about 3 per day, so we're going to have to add those up as we go. But as you guys can see, February 9th, there was a ton right here, 286,000, 270,000 there on February 10th. But then it just starts going crazy. On February 11th, there was about 500,000 right here. February 14th, another 500,000 right there. That's about 2.5% of the float, and it gets even crazier. It's about 5% right here, 1/20th of the float, almost. It was almost a million there on 216. There was a million on 217, more than a million. So again, that's 5% of the float. I mean, we're almost at 10% of the float now here on 218. Absolutely insane that they're bypassing this short sell regulation rule, shorting over 5% of the float as a short exempt in a single trading day. 4 million right here. That's almost 25% of the float. That's 20% of the float right there. And it just doesn't stop. Another 4 million right here. And it's just absolutely crazy. They did this day after day in February. And as you guys can see in February, if we pull out this daily chart, it pretty much only went down. It went down from $3.50 right here all the way down to 50 cents. It's just a crazy sell-off that happens in correlation with these short exempts. So that's exactly what we're trying to squeeze. So even though the short interest data is not too crazy, the short exempt data is absolutely ridiculous. And this could lead to some of the price action that we're seeing today, some of the reason why we're actually up 145% today. Now, it definitely has to do with retail buying as well. Like we mentioned already, the short search engine volume was up like crazy. So it's definitely just normal buying as well. But there's also going to just be an influx of short covering because, again, that short exempt volume is ridiculous. And there's no proof that they have actually delivered these shares yet. So you can see that the short exempts from 217 up to 224 were absolutely ridiculous, right? And we have the failure to delivers as well right here, going back from February, beginning of February up to February 15th. So a majority of these short exempts where it got absolutely ridiculous towards the end of February, so after 215, that's not going to show up in the failure to delivers. And as you guys can see, they were absolutely insane anyways. 300,000 right here, 465,000 right here, 397,000 on February 11th, etc. And again, this is not including anything past 215, and this is where the short exempts really got crazy. Looking at the whale flow, it was absolutely insane. You don't see this from a penny stock under 100 million. This is insane. And if we pull up the charts right here, it was 78% bullish. Most people are going for 318, although there was definitely a lot of open interest as well at that 1021. But you just don't see bets like this. I mean, 75,000 right here. That was fired at about 2:46 p.m. I mean, this premium is a lot for a stock that's worth $1 billion, let alone 50 million. So people are extremely bullish on this stock. You can see the call option volume today was incredible. It spiked up like crazy, all-time high by far. Now, typically speaking, you don't want to be buying when call option volume is super high because you are way more likely to lose your money. So understand the risk management here. You got to risk manage if you're buying something with this high volume. And that can be said about any, like just normal volume in general. If we're looking at it, today's volume was absolutely crazy. You got to be a little careful when you're buying these. You are chasing at this point. It's up 145%. The call option IVs have gone up like crazy. It's at 331%. It's a dangerous one, right? And people aren't going to like that I'm saying that, but you can get absolutely slaughtered when you see statistics like this. Moving into the biggest option trades of the day, it was 80% bullish, mostly buying call options, which leads me to believe there's probably some more upside here. Max pain for 318 right here is 2.5, which would also imply some upside. Dark pool volume was pretty high today, but not as high as it was back here on February 18th. And again, this was a day where short exempts were through the roof. You can see right here, 218, there was almost 2 million short exempts right there. So it just gets a little sus. It gets a little sus. There's also crazy gamma exposure here at $2.50. So you can kind of see this as like a Mario Kart booster pad. You go over that $2.50 range, the boosters come on, the stock starts moving very volatile to the upside. So if MULN does reach this 250 mark, which honestly at this point I think it probably will, just based off the momentum that we're seeing so far, it can get real violent. I expect a move over 250 to perpetuate it up over 3. In all honesty. However, if the momentum does not push it over $2.50, let's say it stops at $2.48, then the risk of falling to the downside becomes a lot greater because that gamma will unwind. So this gamma exposure that you're seeing right here, it'll unwind. There will be less gamma exposure, etc. And it can perpetuate a move to the downside as well. So that's about it for the video. I hope you guys have enjoyed. As always, drop a like if you guys did. Subscribe to the channel if you are new. And MULN, super insane. They went absolutely bonkers with this short exempt. Absolutely abused the short exemption rule. And I don't know, guys. I don't know when we're going to get change in this market, but we deserve it. We deserve it. We've been seeing a lot of suffering, and honestly, I feel like most retail just doesn't think that they're in control of the stock price, right? we can be 100% bullish. All of us can be bullish on one single stock. And it's getting to the point where it just feels like no matter what, no matter how much retail money gets plowed into a stock, it just doesn't mean anything because there's all these tools. There's dark pools, there's short exemptions, you name it. They can use it against us. You can overload on puts and get huge amounts of negative gamma exposure from put options. I've seen that on AMC stock. It's crazy. It's crazy what institutions can do. It's crazy what they can coordinate. It's crazy the amount of leverage that they have, the amount of margin that they use. And it's all being used essentially to suck money out of people like you and me. So there needs to be change. There needs to be reform. Y'all have heard the lecture before. MULN is no exception. It got absolutely wrecked because of these rules. And because of that, I hope this thing continues to climb and continues to F over those shorts. But with that being said, that's about it. Check out Moomoo if you want up to $7,000 in free stock as long as you deposit $1 on their platform. It's the second link in the description or first link in the pinned comment section. And if you want all of my buy and sell alerts, a private Discord community where I do exclusive due diligence and I engage one-on-one with the active VIP members, you can check that out using the first link below in the description or pinned comment section. But that's all I got. Drop a like before y'all leave, and Hootmoney's out. See ya.